All right, guys, welcome back for another video. In today's video, I'm going to talk about the Consumer Price Index, or CPI. If you guys are familiar with this data release, you'll know that that there was a new CPI printed this morning, sort of around the New York Open. I was actually long in Nasdaq on my paper trading account, just by chance. I don't trade data releases, but I just happened to be long during that time. Um, Again, not trading the CPI, but just taking advantage of the volatility. And I just want to illustrate how difficult it is to trade these data releases and why I don't try to trade them. And by doing that, I need to go over to the CPI. So uh, essentially, from what I've read in different Bloomberg terminals and different aggregate sources, I believe the expectation of the market was for CPI to come in at 8.8%. Now, this official release, the number we're really looking at is the 9.1%. So over the last 12 months, the all items index increased 9.1% before seasonal adjustment. That's the number we're concerned with. That's the data release. The 9.1% came in over the 8.8% number that was priced in and that represented the expectation in the market. And you would think that price would sell off after that news. And really, price has whipped around, right, running down for liquidity, and it's basically at parity. But if you look at the open, prices rallied off the open, essentially. Well, dipped down and rallied off the open. So to illustrate that point further, I have to draw your attention to this chart, and this is from the CFTC. It aggregates different asset manager and hedge fund positions, and essentially, what you're seeing here is that I believe asset managers and hedge funds were trying to trade this and position them short, predicting that CPI would come in over the expectation that exists in the market, and whether they're hedging or opening short positions in anticipation of that. That's what we see here represented in this chart. And the point I'm trying to make is that these guys were ultimately right? But since they're all taking the same trade at the same time, they're probably ultimately going to be wrong because they're entering a crowded trade, even though their analysis and their expectation that CPI would come in over the 8.8 number was correct, because everybody else was making a similar trade. Whenever that happens, you're probably going to be wrong. And this is a great example of that. So yeah, price dipped down and rallied off the open. Again, we haven't closed yet, but so there's a lot left to be seen. But if there's one thing I've learned from looking at the markets over a significant period of time, it's that whenever everybody is looking in the same direction or entering a crowded trade, even if they're right, they're probably ultimately going to be wrong. Anyway, I hope you guys like this content. Please leave a like on the video, subscribe to the channel, and I'll catch you guys in the next episode.